Welcome to Daxue Talks, a show powered by Daxue Consulting, a China-based strategic market research company founded in 2010.
Hi, I'm Jess. I'm an audit manager from Dezan Shira Associates. We are a professional service firm providing all kinds of market entry, accounting, tax, legal, and other advisory services for international investors who would like to conduct business in Asia.
Will financial ratios be significantly impacted?
The new lease standard in China has significantly changed lessee accounting for operating lease. It has changed from off-balance sheet treatment to on-balance sheet treatment. So if we look at the balance sheet, the total asset will likely to increase because of the right of use assets recognized, and the total liabilities will increase because of the lease liabilities. And also, lease liabilities will be divided into the current portion and the non-current portion based on the payment due date. So this will have a significant impact on various financial indicators, such as return on assets, which is likely to decrease, and it would also affect your gearing ratio, which would likely to increase because of the lease liability recognized. And also, if we look at the income statement, the new standards will affect the income statement by recognizing depreciation expense of the right of use assets and interest expense of leased asset of the lease liability. So it will affect the earnings before interest and taxes. You would likely to see an increase in EBITDA because depreciation and interest expenses are excluded from this metric. Also, for lessees, the total expense recognized in the income statement will be front-loaded, meaning that the total expense for the first few periods immediately after the inception of the lease will be larger than the amount that would have been reported under the old standards. So be mindful about that when interpreting the financial ratios. And if we look at the cash flow statements of a company, the operating lease payments under the old lease accounting are included in cash flows used in operating activities. However, under the new standards, repayment of lease liability and interest will be included in cash flows used in financing activities according to the Chinese accounting standards. Of course, there will be exceptions. For example, the short-term lease payments and the lease payment for low-value assets, as well as variable lease payments, will still be included in cash flows used in operating activities. So because of these changes in various ratios, applying the new lease accounting may affect your bank covenants calculation. So it's very important to plan ahead and talk to your creditors about potential impact.
What disclosures should investors expect to help explain the new lease accounting?
The new lease accounting in China requires companies to disclose both qualitative information and quantitative information about leases. As to the qualitative information, investors would be able to learn about the accounting policies regarding leases. For example, have the company applied any simplified treatment for short-term lease or low-value leases? And if yes, what's the amount of rental expense recorded in the income statement for the year? And also, are there any sales and leaseback arrangements, and what's its impact on the P&L? Are there any sublease arrangements, and how much income has a company gained from such arrangements? And also, there will be disclosures about are there any variable lease payments. If the lease is financially significant, I think investors may also find information about the nature of the leases, including, for example, what kind of assets are there held on lease, and what's the quantity of the assets, how long is the lease term? Are there any option to renew or terminate the lease? And what are the key judgments as to whether the company will exercise that option? As to the quantitative side, investors will be able to see a movement of the right of use assets. So if you see some additions to the right of use assets, that's likely to be the new leases the company entered into during the year. And also investors would be able to see interest expense arising from lease liabilities, as well as the total cash flow impact in relation to leases. And finally, since lease liability is a kind of financial liability, so according to the disclosure requirements as specified in CS 37, presentation of financial instruments, investors would be able to see some maturity analysis and liquidity risk analysis about lease liabilities.
We interrupt this show to bring you breaking news of more awesome China business tips. You can find these tips on our other China business channels. Follow our LinkedIn for almost daily China market and business updates. Find the link in the description.
For which industries will the impact be particularly significant?
The new lease accounting affects the lessee the most, and the impact will be particularly significant for industries that heavily adopt the operating lease model. For example, in a research conducted by PwC regarding the impact of the new lease accounting on different industries, they found that more than half of the manufacturing business around the globe find their interest-bearing debt ratio increases by 98%, almost doubled, when they start applying the new lease accounting and recognize lease liabilities on the balance sheet. And they found that around half of the manufacturing business saw at least a 41% increase in the EBITDA, which is earnings before interest, taxation, depreciation, and amortization. And this is because interest expense of the lease liability and depreciation expense of the right of use assets are now excluded from EBITDA. And following manufacturing industry, the research shows that applying the new lease accounting also significantly affect the airline companies, pharmaceutical companies, transportation and logistics, media, and telecommunication companies. Anyway, I think the point is, if the company heavily rely on leased assets, the new lease accounting will affect the company when it changes from the off-balance sheet treatment to the on-balance sheet treatment for what's used to be called operating lease. And as a foreign investor, you should also be careful when interpreting the changes in financial ratios of the companies that adopt the new lease accounting standards for the first time in China.
Any questions? We will find an expert to answer them. Drop your questions in the comments or send us an email, dx@dashwayconsulting.com.